So most traders think that they're losing because their entries are off or their exits are a second too late. But that's not it. The real reason you keep bleeding your account isn't the technical skill. It's the habits you don't even realize are sabotaging you. And here's the tricky part. These habits, guys, often look like good trading decisions in the moment. You kind of think you're being proactive, you think you're adapting to the market, but in reality, you're quietly digging yourself into a deeper hole. So in this video, I'm going to expose the three silent account killers that might be hiding in your trading right now. And more importantly, I'm going to show you exactly how to replace them with a belief system so strong that you'll never second guess a trade again. Now, once you lock in this, discipline stops being something that you have to force and starts becoming the natural way you operate. So the first silent account killer is FOMO disguised as being proactive. Now, this one is pretty sneaky because it feels like discipline in the moment. You kind of convince yourself you're being proactive by taking trades quickly, seizing the opportunity. But if you strip away the justifications, what what's really happening is you're reacting from a place of fear, fear of missing out, fear that the market will run without you, fear that if you don't take this trade, there won't be another one. Now, the psychology behind it is simple. Your brain hates uncertainty. It wants closure. So the second you see price moving, it screams at you, get in now, just take it, just in case. And then without realizing it, you've handed over your decision, you've handed over your decision making to your survival instincts and not your strategy. So here's a reality. Patient feels, or should I say patience feels like doing nothing, but in trading, it's the most profitable action that you can take. So let me give you a chart example. Let's say price is consolidating. You see a potential breakout. You jump in early to be proactive. And then the candle whips straight back into the range, taking you out for a loss. Now, you didn't just lose money. You lost emotional capital. And now you're primed for the next silent killer, which is revenge trading. So the real question here is, how do you spot FOMO before you click the button? But you got to ask yourself one very powerful question. If I knew there were 5 more A+ setups coming today, would I still take this one? And if the honest answer is no, then you're in FOMO mode. And the second you can call it out in yourself, you give yourself a chance to step back, to breathe, trade the plan and not the panic. So the first is FOMO. The second silent account killer is revenge trading, disguised as getting back in the game. Now, this one, it doesn't show up when you're winning. It shows up after a loss. And it's dangerous because your brain will sell it to you as a comeback story. So you'll tell yourself, I'm just getting back in the game. I got emotional. I see another opportunity. But I want to be brutally honest with you guys. You're not looking for opportunity. You're looking for redemption. And psychologically, here's what's going on. A loss creates discomfort. And then your mind hates discomfort more than it loves profit, believe it or not. So instead of accepting the loss and resetting, you try to erase it as fast as you can. So you're no longer trading to win, you're trading not to be wrong. And the problem is when you're in this state, your standards drop, right? You take a setup that's half baked. You'll enter too early. You'll increase your lot size to make it back in one trade. And then 9 times out of 10, you're compounding the damage. So here's the truth. Revenge trades are never about the market. They're about your ego's need for disclosure, not disclosure, your ego's need for closure. So if I paint a picture here for you, you take a clean setup, it loses, and instead of logging the trade and walking away, you spot something that kind of looks like a setup, but not really. You enter anyway, and then within minutes, you're stopped out again. Now you're two trades down, not because the market was unbeatable, but because you couldn't leave your ego in the corner. So how do you spot this one in real time? Well, it's simple. After a loss, ask yourself this one very powerful question. If I had won the last trade, would I still be taking this one? And if the answer is no, then you're chasing redemption, not profit. And in that moment, guys, discipline is in walking away and not doubling down. So that's the silent account killer number 2, revenge trading. Silent account killer number 3 is strategy hopping, disguised as adapting to the market. Now, this one is sneaky because it kind of feels like growth, right? You lose a trade or a string of trades, and then your brain whispers, maybe this strategy isn't working. Maybe it's the market conditions. So let's switch it up. So on the surface, that sounds like you're adapting. But here's the problem. If you change your approach every time you hit friction, you're never giving your strategy the time or the data to prove itself. And this is where most traders quietly kill their own progress, because you can't master anything if you keep abandoning. And you can't build a belief system on quicksand. So you got to think of it like this. If you keep changing the map every time you hit traffic, you're never going to reach the destination. And on the charts, it looks like this. You've been trading, let's just say, clean pullback entries on pound USD for 2 weeks. One bad week hits, and then suddenly you're on gold scalping because you saw someone on Instagram post a big win. All you've done is reset your learning curve back to day one. And the irony is, a lot of the time, if you had just stuck to your original plan, the next week would have been profitable. But because you switched lanes, you missed it. So here's how you catch yourself before you fall into this trap. Before you change anything in your strategy, you've got to ask yourself this very powerful question. Do I have at least 50 fully journaled trades of data that prove this approach doesn't work? And if the answer is no, then you're not adapting, you're avoiding. And here's the kicker. Every single one of these silent account killers, FOMO, revenge trading, strategy hopping, they all have the same root cause. You don't yet have a belief system strong enough to override your impulses. Because if we're real with each other, the market will always tempt you. There will always be a candle that looks too good to miss. There will always be a loss that stings so bad you want to win it back. And there will always be someone flashing a shiny new strategy online. So the fix isn't just trade better. It's believe deeper, guys. Because your trades will never outperform the beliefs that you place behind them. And that's why I want to give you the belief system blueprint, a framework to rebuild trust with yourself so you can execute without second guessing. So step one, what I want you to do is I want you to define your core trading identity before you touch the charts. Before you click buy or sell, you need to know exactly who you're showing up as in the market. Because most traders skip this step completely, right? They're obsessed with what trade they'll take, but they never decided who is taking it. And here's the truth. If you don't know that, then every trade you place will feel like a coin toss, and you will be tossed around with it too. So your trading identity is the anchor that keeps you stable in storms. It's the filter that you run every decision through. And I want you to think about it. If your identity is, I'm a sniper trader who only takes clean, high probability setups, then when a messy setup appears, you won't even flinch, right? You don't have to decide if you should take it. It's already decided because it's not who you are. But if your identity is undefined, then you're like a shapeshifter in the market. One day you'll be a scalper, the next day you'll be a swing trader, one day you're patient, the next day you're chasing every candle that moves. And then that's where FOMO and revenge trading creep in because there's nothing holding you to a standard. So here's the exercise. Write down, just in one sentence, the trader that you're becoming. Not the trader that you are today, the trader you're committed to becoming 90 days from now. So as an example, I'm a disciplined, patient trader who only executes my edge when it's crystal clear. I'm a funded trader who follows my plan like a professional, no matter how the market tempts me. And then once you've got it, stick it somewhere visible. Trading station, phone, wallpaper, journal cover, tattoo on your forehead. No, that's not funny, not literally. But this is your identity statement. And you got to read it before every session. You measure every action against it. Because when you're clear on who you are in the market, your actions follow naturally. And then you don't fight your impulses as much, you filter them. And then slowly that identity becomes second nature until trading with discipline isn't something you force, it's simply who you are. Okay? The second thing that I want you to do is rewire through repetition. So once you've defined who you are as a trader, you've got to prove it to yourself through repetition because belief isn't built in your head. It's built in your track record. And a lot of traders think confidence comes from winning. And I'm here to tell you today, it doesn't. Confidence comes from evidence, and evidence that you can follow your own rules, evidence that you can sit on your hands when you should, evidence that you can execute without hesitation when the setup is there. And the only way to build that evidence is through focused, repeated exposure to the same thing until your brain says, this is what we do here. And here's how. Pick one pair, one setup, one time frame. That is it. No distractions, no hop into gold because it's moving faster today. No trying a new indicator because you saw it on YouTube last night. You're locking in on one single environment and mastering it. You've got to study it like an athlete studies their game. Every evening, screenshot every clean example of your setup from the day, even if you didn't trade it. Log them, label them, and then over time, guys, you will start to see patterns in the market and in your own behavior. And just commit to 20 trading days minimum, 30 trading days minimum before you even think about adjusting. And that's not 30 calendar days of trying when I feel like it. That's 30 sessions of showing up, marking the charts, and tracking the results. And why this works? Because your brain wires habits through repetition, not through random adrenaline-filled aha moments. So the more you repeat the same process under the same rules, the more automatic it becomes. And then eventually following your plan, it isn't a conscious choice, it's a muscle memory. And here's a key mindset shift. You're not doing 30 days to get results. You're doing 30 days to become the trader who can get results on demand. So when you do this right, something powerful happens. You stop needing to trust the market because you've learned to trust yourself. And that's when discipline starts to feel effortless. Okay? Step number three, you've got to build a pre-market ritual because most traders sabotage their day before they even click buy or sell because they open the charts in a reactive mode. And the second they log in, they're scanning the markets for action, they're hunting for movement, and then that puts them in this exact state the market loves to exploit. Emotional, rushed, willing to bend their rules for just one quick trade. And guys, you got to flip that completely. You got to go from being reactive to proactive. And the way you do that is by building a pre-market ritual that grounds you before you even enter the market, before the market even has a chance to tempt you. So here's how you do it. Just start with a simple review, not opportunity. Before you look for trades, review yesterday's. What worked? What didn't? Did you follow your plan? And this grounds you in process and not profit. Mark your levels, identify your key zones, look for clean formations, draw them up so that you already know your playing field for that session. Write your if then scenario. So for example, if price breaks above this level and retests with my setup, then I will enter. If it fails, I will step aside. And this is powerful because it shifts decisions into a calm, pre-planned state rather than a heat of the moment gamble. Check your mental state. If you're feeling rushed, frustrated, overly hyped before you even take a trade, pause. No ritual can work if your headspace is chaotic. And I want you to think of it like this. Your pre-market ritual is your script. Okay, the market is just the stage. Without the script, you're improvising. And in trading, improvising gets expensive. So when you build this habit, the charts stop feeling like a jungle and start feeling like a track that you've already walked 100 times. So you're no longer chasing opportunities here. You're executing a plan that you wrote whilst calm, clear, and in control. And then here's where the magic happens. When you start every session like this, you automatically protect yourself from FOMO, from revenge trading and strategy hopping, because your moves are already mapped. Okay. Step four, daily trust deposits. This is the part most traders ignore, but it's the part that will completely transform your confidence. Every decision you make at the charts is either a deposit or a withdrawal from your confidence bank. Follow your rules, deposit. Break them, withdrawal. And the reason so many traders second guess themselves isn't because they don't know enough, it's because their account with themselves is overdrawn. They've made too many promises and broken them. So here's the key. You don't rebuild that trust by hitting big wins. You rebuild it by stacking small, repeatable wins in behavior day after day. So example of trust deposits, passing on a trade that doesn't meet all your criteria, even if it looks tempting. Closing the laptop at your planned time to stop trading, even when the market looks alive. Risking exactly what you said you would, no more, no less. Journaling your session, being honest and transparent, even when it hurts to see the losses on the black and white. And each time you do this, guys, you send a message to yourself. When I say I'm going to do something, I do it. And that's how belief systems are built, not in a day, but in the repetition of disciplined actions until breaking your rules feels unnatural. And here's the truth. Once your confidence bank is full, discipline stops being a fight and it becomes your default. So you won't have to force yourself to avoid FOMO trades. You simply will feel aligned taking them. And you won't have to resist revenge trades because they're going to feel out of character. Because when you're operating from a place of trust in yourself, your trading stops being a gamble and it starts being an expression of who you are as a trader. And understand this, discipline isn't something you practice, it's something that you become. So once you've proven to yourself you can do it, then you could be trusted. Okay? So here's the thing. If you kill the free silent account killers, you replace them with a rock solid belief system. You're going to find that the market stops feeling like chaos and it starts feeling like familiar territory. You'll stop chasing the payout because you'll have become the trader who earns it without force. So I really hope this resonated with some of you guys. If you enjoyed this video, do me a big favor. Hit the like button, subscribe, turn on notifications. And as I always say, continue to trust the process.